Yeah, we think the return of forward guidance is going to be an important part of the release this afternoon. We'll be keeping a close eye on the dot plot, which shows where policymakers think rates are headed over the next couple of years and over the longer term. In particular, we think that if you see a move much lower in the longer term dot, that could be a more strong form of forward guidance indicating really how long the Fed expects to remain low. And we do think that that's going to be for a long time, and we think that the market's going to be particularly focused on what those dots tell us, as well as what the economic projections for economic growth and inflation show.
And in terms of the economic data, I think the focal point for investors was last week's jobs report, which was really remarkable. Although, yes, there is some concern around misclassification of some employees who perhaps should have been counted as unemployed but weren't. So perhaps the number was not quite as strong as it looked. But what do you think the Fed is likely to think about the employment situation moving forward? I guess the big question is when we actually see unemployment drop back to 5% type levels.
Yeah, as far as the Fed's decision making goes and how they're thinking about how the economy is evolving throughout this crisis, I think it's an encouraging number no matter what, even if you do have some discrepancies in the data collection or however you want to classify it. And that'll be an important factor as far as how they get a gauge for how the economy is coming out of this fallout in some of the months where we have seen some reopening. So we think that's an important and positive sign, and it certainly was reflected in financial markets at the end of last week. And we also think that that brings in additional focus to CPI that is released later today in the morning in the US. And perhaps if we get an upside surprise there, you could get another boost to yields and perhaps a steepening of the curve.